Hey everyone, in continuation to our series on ACE Investors portfolio, today I want to discuss the portfolio of a fine and specialty chemical that has a market cap of around 1,850 crore. So it's a micro cap company. And one of the ACE investor, Mr. Ashish Kacholia, is looking very bullish on this company and has consistently added stake from 2.36% to recently at 3.99%. Stock name is Yasho Industry. So in this video, we'll look at the business model, leadership, future growth, key moat and risk, and then we'll analyze its valuation. But before we begin, a quick disclaimer that I'm not a SEBI registered advisor. This video is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. Incorporated in 1985, Yasho Industry is basically into the business of specialty and fine chemicals. So it's been nearly 38 years for the company and it manufactures 148 products across 5 business verticals: food antioxidant, aroma chemical, rubber chemical, lubricant additives and specialty chemical. Now let us try to understand the business division in detail. So first is food antioxidant. Within this segment, company has currently 5 products that are used to keep food fresh and appetizing for a longer time while enhancing its nutrient content. So its end application is in edible oils, confectionaries, food, animal feed, nutraceutical segment and so on. Then second is aroma chemical, and within this segment company has currently 13 products like your fatty ester and natural and essential aroma oils that are used in personal care products like your toiletry and cosmetic, then oral cares like your toothpaste, tooth powder, mouthwash, then flavors and fragrance, then agrochemical, then pharmaceutical products such as your pain relief, cold and cough formulation. Please note that Yasho Industry is a leader in clove oil and its derivative in the market. Then third segment is rubber chemical. Within this company is currently 87 products that are used to manufacture tires and automotive components for vehicle. Apart from this, rubber chemical also find application in conveyor belts, surgical gloves, then condoms and balloons. Then fourth segment is lubricant additive. Within this segment, company is currently 22 products that find application in hydraulic, turbines, engines, etc. And fifth is specialty chemical, and within this company has 21 products with multiple areas of application as per the need of client, including stabilizer for acrylic, then printing ink coating, then UPR resins and fiber composite resin, then cross linkers for thermoplast, and then your electroplating chemicals, and then intermediates for API and bulk drugs and agrochemical. If you look at the revenue breakup in FY22, aroma chemical contributed 14% in total revenue. Food antioxidant contribution was 13%. Rubber chemical has highest contribution with 35% revenue share. Then lubricant additive contribution is 14% and specialty chemical contribution was 25%. Please note that among these 5 business segments, aroma chemical and food antioxidant segment is very competitive, and that's why company is focusing on the remaining 3, that is rubber, lubricant and specialty chemical. And even their share in revenue is growing over period. In terms of geography breakup, in FY22, 36% contribution was from India, 27% from US, 22% from Europe and 15% from rest of the world. So very well diversified business across the world. Currently, company has 3 manufacturing sites in Vapi, Gujarat with a total capacity of 11,000 metric ton. By the way, there is a huge capacity expansion plan in the company that we will cover in the future growth prospect. Today, company has reached in 50 plus countries with over 2,000 clients, and some of the marquee clients include Apollo Tyres, Seat, MRF, Michelin, Continental AG, Colgate-Palmolive, Dabur, Indian Oil, Adani Wilmar, HP and so on. So client list include top names industry that signifies reputation of Yasho Industry in its domain. Now if you look at company's financials, its revenues have grown from 169 crore in 2015 to 180 crore, then 195, 250, 340, then slight fall during COVID, but again recovered to 359, then 614, and in FY23 it's 670 crore. So company revenues have been very consistent, and in last 5 year revenues have grown by 2.5 times. Interestingly, its margins have consistently improved from 9% to 11%, then 13, 14, 15, and latest at 17%. The biggest reason for improvement in margin is due to higher contribution from specialty chemical, rubber chemical and lubricant additive that are high margin business. Going forward, these are the 3 key growth drivers for the company. Now, due to margin expansion over the last 7-8 years, Yasho Industry operating profits have zoomed from 15 crore to 20, then 22, then 27, 37, 40, 49, 93 and now at 111 crore. What a consistent and brilliant growth. In last 5 years, company's operating profits have zoomed by 4 times. Its net profits have also grown consistently from 0 to 2, then 4, 8, 12, 21, 53 and now at 64 crore. Again, a consistent growth every year. Company's profitability has also improved with ROC increasing from low teens to mid-teens and then in 20s. Its latest ROC is 22%, which is again great. Although there is one concern around the inventory days that have increased as compared to last year. Another concern is on its debt levels, where its debt to equity is 1.37, which is on higher side. In terms of cash flow, company has consistently generated positive cash flow from operation. So overall, the growth has been fantastic. Margins have consistently improved and profitability is also high. The only concern is slightly higher debt level, which company has raised for its expansion plan. Now, if you look at the leadership, Yasho Industries was founded by Mr. Vinod Javeri in 1985 and it is currently run by a second generation leader of the family, Mr. Parag Javeri and Yayesh Javeri. Mr. Parag is the elder brother while Yayesh is the younger one. Mr. Parag is the MD and CEO of the company and has done Masters of Science in Organic Chemistry and associated with the company since 30 plus years. And Mr. Yayesh is the Director and CFO of the company. He has done his Bachelor's in Commerce and associated with the company since over 25 years. So now let us look at the future growth prospect of the company. As far as future is concerned, we have discussed many times about the humongous growth potential in the Indian chemical sector, especially within specialty chemical. Some of the key reasons include low cost labor, skilled talent, availability of resources like land, electricity, etc. at cheaper rates and so on. And China Plus One has created massive growth opportunity in Indian chemical sector. It is further fueled with rising consumption within Indian economy. Now, one way to look at future growth is companies plan to expand their capacity, because if company is expanding its capacity, it signifies there is enough opportunities out there. An increase in capacity ultimately result in growth in revenue and profits. Now, if you look at this particular slide, you will get the idea about Yasho Industries future growth plans. So in FY22, company had a total capacity of 11,000 metric ton per annum. Then in FY23, they added 1500 metric ton per annum in existing capacity by process change and plant correction. But look at the plan for FY24. Yasho Industries has started a greenfield project at Pakhanjan in Gujarat with a capacity of 17,000 metric ton per annum. Wow! Basically, this new facility would be even bigger than the combined facility so far. The estimated cost for phase 1 of this expansion is 400 crore rupee, and most important, this would be for industrial chemical with EBITDA margin higher than 20%. Please note that currently their EBITDA margins are 17% in FY23. So there is more scope for margin expansion in the future. The timeline for production are Q4 of FY24 and currently we are in Q1. The estimated revenue from phase 1 are 550 to 600 crore and in FY23 their entire revenue was 670 crore. So that would double the revenue. The source for funding include 269 crore from bank and 131 crore via internal accrual. That's the reason their debt level has gone up. And another important point to note is that even after 17,000 metric ton per annum addition, phase 1 will use 50 to 55% of newly acquired 42-acre land. So 50% of land would still be available for expansion. So new facility would not only add up the revenue by a significant margin, it would boost the EBITDA and net profit significantly. Clearly, the future is looking very bright. Now, as far as company moat is concerned, there are high entry barriers in this sector due to complex process and technology that makes it difficult for new entrant. Then there is a long gestation between investment in R&D and commercialization of new product. Moreover, there are strict regulations and environmental compliance. So entry barriers are strong. Yasho Industries has nearly 4 decades of experience in the business with a strong relationship with top companies of the world. Moreover, companies constantly innovating to bring new products and stay ahead of the trend. So looks like a solid business with solid leadership and good moat with high entry barrier. Now let us look at the key risk. So if you look at the key risk, the first risk is environmental concern. In chemical sector, you always have risk of environmental damage and stricter regulation. Then second risk is input cost volatility. Since chemical sector requires a lot of power, it's always prone to volatility in your electricity and gas prices, and it has been a common risk across chemical sector. Moreover, raw material fluctuation also result in volatility in margin. Then third risk is high debt and inventory level. To build its new plant, Yasho Industries has taken loan from bank and as a result its debt to equity has increased to 1.3. So company needs to ensure its debt is under control. Moreover, its inventory levels has also increased recently, that also create a risk of inventory loss. Then fourth risk is competition risk. For example, within rubber chemical, its competition is from Nosil, then in aroma competition is from Fairchem Organics, Oriental Aromatics, and likewise it has competition in specialty chemical. And of course, Chinese players are still the leader in the sector. So competition risk would always exist, and that can impact the margin of the company. Now if you look at the shareholding pattern, promoters are holding 71.54% stake and remaining is with public. Within public, Ashish Kacholia made an entry in December 21, and since then, he has consistently increased his stake to current levels of 3.99. In terms of share price movement, company launched its IPO in 2018 at levels of around 100 and it remained flat till 2020, and then it zoomed to levels of 2000 during 2021 bull run. But then there was a correction, and for more than 1 year, stock has corrected to levels of 1300. And recently, the share price has increased to levels of 1650 rupee. At current levels, stock is trading at a P ratio of 29 with a market cap of around 1850 crore. So considering the future growth prospect, valuations are also looking very attractive. Overall, if we conclude, Yasho Industries is a leading player in fine and specialty chemical segment with strong track record and leadership. Company is planning a huge capacity expansion in FY24 with special focus on rubber chemical, lubricants and specialty chemical. This would further expand their margins. The future potential is also looking immense and financials are also looking solid. Company also has a strong moat in terms of high entry barrier and strong relationship with top clients. On top of that, unlike other chemical companies that command a very high valuation, Yasho Industries has a reasonable PE of 29. So clearly it looks like Mr. Ashish Kacholia is very optimistic and this particular investment can potentially reap a lot of reward for him in the long term. So this is it for this video. Let me know what you think about Yasho Industries. Is it worth investing or there are better alternatives? I hope you'll find this video useful. I'll see you next video. Till then, take care.